You throw over $1,000 a month into local wishing wells.
Of course, you idiot, because I'm wishing for more money.
This is the Keeping Your Money Show with Jamie Westenberger and Bart Steinler.
All right, welcome back to Keeping Your Money Show. Jamie Westenberger, joined as always by Bart Steinler. We were talking about terrible advice and how easily it is to find it. If you missed any part of our show, of course, you can always find it on the web. Just go to keepingyourmoney.com. You can also find it on iTunes, Google Play, SoundCloud, YouTube, and Stitcher. If you're not following us on Facebook, why not? Go to facebook.com/keepingyourmoney. Like our page, and you'll get updates on what we're going to talk about, new educational or events that we've got coming up, talks we're going to be doing, various different things. So good way to keep in the loop on what's going on at the Keeping Your Money Show. So this was kind of interesting. I actually started to write an article similar to this a while ago. Mm-hmm. And, you know, work gets in the way, and sometimes things like articles and stuff that we do maybe to submit to trade journals and stuff, it is not a priority. So, you know, it kind of ends up on the back burner. I think I have 5 or 6 half-finished articles that I started to think about. But this is a really interesting topic from the standpoint of, I don't think the average person out there who's not in the financial industry understands how normal it is for what they're talking about here. And that is that your financial advisor very well may have a financial advisor that's not themselves. And that may surprise people to learn that the person they rely on to make sure their retirement is okay doesn't rely on themselves. And you know, it may be kind of shocking, right?
Extrapolating that a little further, the financial advisor you use may have other people that they defer to run the portfolios that he's actually using for your situation.
Sure.
All sorts of things. And that as a financial advisor, we're getting advice from all sorts of sources on a regular basis to help us do our job. So the idea of going out and getting advice is really something that a lot of people kind of fight against, but it's really something that a lot of people in a lot of different situations do for a lot of good reasons.
Well, and I think one of the things that maybe, you know, I think a lot of times when someone thinks about going to a financial advisor, right, you're going to sit down with them. He's going to come up with your investment strategy. He or she's going to lay out your retirement income strategy, you know, all of these things, right? Mm-hmm. But they leave out some of the aspects of a relationship with a financial professional that maybe aren't as obvious all the time, but are also very important, and why someone who even is an advisor chooses to have an advisor. And the first one is you take the emotions out of it.
Absolutely.
If you're emotionally attached to what you're investing, you will invest it differently than if you're not, usually to your own detriment, mm-hmm. right? I'll never forget when I first started in the business, I was handling an account for my mom, and I was just as bad as some of my worst clients. I would look at it every day. What had happened? Why did that go down 3 cents? What on earth is going on? I thought this was a good investment. Like, I mean, I would go crazy over it because it was my mom. I didn't want my mom, you know, to lose any money. And eventually I turned the account over to someone who I trusted because I knew they would actually do better for her simply because they weren't so emotionally invested in it, you know?
Right.
And there's other ways to do that. You know, I mean, when we talk about our own things, Bart and I mean, Bart, we kick around ideas all the time back and forth to each other.
Absolutely.
A lot of my own personal retirement assets and other investments are managed by third parties. I hire a manager to manage it. I'm not in there buying and selling stuff or, you know, inside of it, because I realize my own personal connection to my money is going to influence my judgment. It also helps to make sure you're disconnected from, you know, other types of judgment, right? If you're really heavily invested something, you don't want to have that cloud in any way, any recommendations you're going to make to somebody else about what they should be invested in.
Yeah, you mentioned about emotions earlier, and I was thinking about a couple of the appointments I've had over the last couple of weeks, and really emotions is a very, very large part of the benefits that we offer the people that work with us, because they may be emotionally attached to an investment. They may be emotionally attached to somebody else that they're working with in another part of their life. But maybe that person isn't doing a very good job, and it needs to be pointed out to them that, yeah, you've been working with that person for 20 years on your maybe estate or your accounting or your banking connection or something like that. But if you see things that aren't being done correctly or aren't being done for the person's best interest, you have a responsibility of pointing out those things and to help them separate the fact of the job that's being done to the emotion that they have involved with that other party. Same thing with investments. How many times have we talked with people who have an emotional investment to the equity of a company that they used to work for 20 or 30 years, and they don't want to give that up. But the reality is that they have a lot more risk in their retirement because of the concentration of their assets in that one equity.
Well, and that ties into what, behavioral economists say this all the time, that we tend to seek out information that supports our own bias, right?
Right.
So if I work for a company and I think they're a great company and I've worked there for 30 years, I will find things, whether it's in the company newsletter or online or in conversations I overhear, to justify my belief in that, right?
Right.
But I also will probably ignore, whether consciously or subconsciously, information that maybe comes in that would tell me to be a little bit more cautious, because I don't want to believe that. I believe what I believe, right? So sometimes that third party, that advisor coming in without the bias of working for that company for 30 years or owning that stock for a long time or having that professional relationship for decades, can come in and be the person without the background to say, ooh, man, I hope you make it to retirement before that company goes out of business. Why are you owning their stock as well? And be that. And the other thing is an advisor can be a very important third person in the room between a couple. Sometimes the best marriages are built on people having some differences, right? If you always agree with each other, you probably get sick of each other after a while,
I have yet to meet that couple.
Right. The best couples are the couples that have some tendencies that are different than one another. It gives excitement to a relationship. It also can wreak havoc on retirement because one person believes something so strongly, the other one believes it so strongly. Sometimes that advisor can be that person. I always joke with people that, a small part of our job is actually managing money. Many of it is managing relationships and people and expectations and all these other things.
It should say financial advisor / marriage counselor.
Yeah, social worker, psychiatrist. But no, it is really a lot of times. How many times, Bart, have you sat down with somebody that's about to retire and their picture of retirement and their spouse's picture of retirement are completely different? And it's like, wait a minute. You guys have been married for 45 years and you never talked about this before?
Right.
Wow. Okay. Well, I guess let's talk about it.
Let's put
Bob
this on
thinks
the
he's
table.
buying an RV next week and you don't seem to be that into that idea. Maybe we should discuss that, you know? So, but I guess the main point of this article and why I wanted to talk about it was if somebody would not go to themselves for something they do for a living, if someone realizes that third-party advice is good, even when they do that for a job, how on earth could you think that you don't need advice? Realistically. And I think we get caught up sometimes in, they're going to sell me things, or, I've heard about these guys, or, the fees and all this other stuff. But study after study after study shows that investors are more disciplined. They generally do better long term when they have an expert to talk to and walk through what their their needs, wants, and desires are. So if you don't have a financial advisor, I really encourage you to start looking for one. And if you do have one, and maybe you're not happy with them, or maybe you've been with them for 20 years and you're wondering about that emotional connection, what a great time to sit down and get a second opinion. We'd be happy to help you with either. You can always call us at 888-98-MONEY. But at a minimum, find yourself an independent financial advisor to help you wade through some of this stuff. All right, coming up, Roth IRAs for kids. They offer an interesting tax advantage if you follow the rules. We're going to talk about that right here on the Keep Your Money Show.
The ups and downs of a roller coaster are fun for some people, but maybe too nerve-wracking for others. The same is true for the ups and downs of the stock market. If your palms sweat when the market fluctuates, it may be time to reevaluate your investment choices. The ride to your financial future shouldn't keep you awake at night. Call the Keeping Your Money Show at 1-888-98-MONEY to get off the roller coaster and onto solid ground.